Hey, Mad Money fans, check the bottom of your screen for an exclusive offer. Next.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people to make friends. I'm just trying to make you a little money. My job is not just to entertain you, but to educate, do some teaching. Call me at 1-800-743-CNBC or tweet me, Jim Cramer. Look like it might be something that's maybe started something good today, right? Stocks were bouncing, NASDAQ, where all the damage has been, seemed to be stabilizing, but then the gloom returned. And it all broke down, with the Dow ultimately losing 107 points, S&P declining 0.23%, and the NASDAQ dipped 0.09%. Not bad, 0.09%, because of how bad it's been. But a selling respite turned into a buying interregnum, and then just no stopping those who won out. Sell, it just isn't. Can it continue like this? Could things finally start picking up as we move toward the end of September, like legendary market historian Larry Williams told us last night? It might just come down to our game plan. See, when we come in on Monday, we'll most likely have some concrete, something we can deal with, maybe sink our teeth into about this UAW strike with Ford. Today, Ford made big inroads with the union, while GM and Stellantis have earned its wrath. They're now being targeted specific walkouts. Makes a ton of sense to me that Ford's got a better relationship than the other big automakers with the union, because they've actually been hiring union people for years while the competitors have been shedding them. It always seemed absurd that Sean Fain, the UAW president, chose to treat the big three equally, given that Ford's pay differential cuts much more in favor of the unions than the other two. And if Ford can get a deal done on decent terms, meaning no material bump in labor costs beyond the current offer, then this charitable trust stock could start a sustained climb. That could be Monday's business. Tuesday, we have one of the best barometers of small business around when we hear from Cintas. Remember, we had them on recently? What a story. Uniform, rental service, a lot of other stuff, too, that they run through that system. The company grows when there's more commerce, and I bet their numbers will be stellar. Cintas has been able to get new contracts even when business isn't strong, and I've long been a fan of the stock. But let's see if they're finally seeing a slowdown in either new or existing clients. I mean, you know what? They got 1 million clients, so we ought to know. Close observers of this show, including just last night, know that I think the world of what Dave Gitlin's doing at Carrier. He's reinventing the company as the most environmentally sound purveyor of heating, ventilation, and air conditioning, or HVAC systems. So much energy is used for climate control. By making this stuff more efficient, he's helping his clients become more environmentally friendly while also reducing their electric bill. Now, Carrier's got this huge deal on the table. Currently, $12 billion euro acquisition of Viessmann Climate Solutions. That's a merger that could close as soon as the end of the year. It's a phenomenal company with a terrific product that uses much less energy to make heat using a special boiler technology. Let's see what they have to say on Tuesday. I like their attitude. After the close, my favorite retailer, Costco, reports there are so many things we need to hear from Costco. Let's figure them out, right? We've got to get the growth rate, the number of new members, including high-tier executive members, and any expansion overseas. We need to see if Costco's got plans for a special dividend, maybe a boost in membership fees. That always helps bottom line. How about how many people are switching from branded products to the premium Kirkland store brand? All these will help us get a beat on how things are really going on in this whole country. Because as much as I love Costco, and I love it enough to own it for my charitable trust, we need to find out whether this company is seeing any kind of consumption slowdown, because the Fed will keep raising rates until the consumer cools. Now, maybe the consumer cools by going more to Costco. Next, Paychex reports Wednesday, and it's the payroll processor of choice for small, medium-sized businesses, which have been holding up incredibly well. It's amazing how few layoffs and bankruptcies we've had, while many new businesses are still being formed. Until outfits like Paychex again start saying business is stalled, you must accept the fact that more rate hikes are coming. It doesn't just go away. We don't like one day and Paychex says things are terrible, because things are good. Like I keep saying, business is way too strong for the Fed to even think of letting up, let alone cutting rates. Who thinks that? Well, besides all the people in the bond market. Now, is the long drought over in the PC world? Has the inventory of semiconductors been worked off, and now And do we finally have fresh demand coupled with the need for storage related to artificial intelligence? Only one company can tell you all that, and that's MU. That's right, MU, Micron, memory chip maker. I really like Micron. I really like its CEO, Sanjay Mehrotra, tells it straight. Incredibly upfront about the oversupply in chips the whole way. I'm going to listen closely to everything he says because so much of tech still depends on the personal computer, a giant DRAM user. That's where they go. Well, they go all over the place, but they're in a lot of different things, but that's what I think. And there's still some time left before we get to the bottom of the huge inventory bulge, but the stock's been creeping up. We still don't have big demand yet at the PC level. We don't have those new PCs. It'll be first quarter 24. They'll be doing all sort of AI stuff with your PC. But that's far out. Maybe we can anticipate it. Let's see what Sanjay says. Thursday morning, we get to hear from one of the most consistent companies in tech, Accenture. Of course, that's because Accenture is not really a tech company, per se, at least. It's more of a consultant to companies that want to digitize. This remarkable business should have a solid handle on artificial intelligence. Is it overblown, or is it truly transformative? How quickly can we make money off it, or are we going to lose money off it? Anybody can tell you it's going to be Accenture. These guys rarely miss, and when they do, the stock tends to sell off hard, and then it comes right back over time because their underlying business is so strong, and people need their help to be able to figure out all this tech stuff. CarMax also reports that turns out these guys are much smarter than I thought. I sit down with them, wow, they know what they're doing. I'm expecting this used car company to put up some great numbers, but there's a financing component here that makes me worried, right? The interest rates have gone higher. People buy cars on time, so to speak, financing. And the Fed's relentless rate hikes is going to be hurting all these used car dealers. In that sense, CarMax is at the front lines of the Fed's attempt to slow the economy. So far, there's been no meaningful slowdown here in the category, even as prices have come down from their highs. Let's find out if higher rates are finally choking sales or if they continue to be good. Probably the most controversial story next week is going to be the quarter from Nike. Now, we need to be concerned about how Chinese sales are holding up because for the first time, we're actually hearing reports that Chinese sneaker companies are making inroads here. I am loath to knock the stock of Nike now that it's down 22% for the year and 40 points from its highs. At the end of the day, this is a darn good company, and Nike stock could be a buy simply because it's so low. For weeks now, Wall Street's had nothing but good things to say about the cruise lines, especially Carnival. I get that. People are long on money and short on time, and the cruise represents a terrific bargain. But believe me, if this market is as gloomy as next Friday, as it was today, well, I got to tell you, you don't want to touch the stock. No way Carnival gets any love unless the backdrop of gloom changes to something a little more bullish. Finally, we get some macro numbers that matter to the Fed, namely the core PCE deflator, both month over month and year over year. This is one of their favorite metrics. I'm laser focused on inflation here because buyers still seem to be reluctant to step up until this tightening cycle's over. And we're now witnessing a classic move toward bonds, given that interest rates have gotten to levels that we haven't seen in 17 years. People want to lock in what they think is a good rate of return. So when you get something like the core PCE deflator, it needs to not just stop going higher. We actually need to see it go lower, or the Fed's not going to be done. Unfortunately, I'm not sure it's there yet. The economy's too strong. But the breathtaking move higher in rates at the long end of the yield curve, 20, 30 years out, may by itself begin to curtail spending, something that's been stubbornly strong because, yes, the job market has been so red hot. Here's the bottom line. I think the averages are getting beaten down to the point where it's a lot easier for us to rally, but until we see some signs that the Fed's truly beaten inflation, it's hard to get too excited about this market, although I am mindful that a market as hated as this one can always throw you a hanging curve. Woo. Arthur in California, please. Arthur.
Hey, Jim. How's it going? Thanks for taking my call.
Absolutely, Arthur. What's going on?
So I was looking into buying a stock, something steady, long-term for my kids who are really young. And I was looking for something that was recession-proof with great dividends. I had my eye on Pepsi or Coca-Cola. Just wanted to get your take. Which one you think? What are your thoughts?
This is tough. Coca-Cola had some really good numbers. It's a little bit cheaper than it has been historically. PepsiCo, Ramon LaGuardia, is just taking this Frito-Lay business and put it turbocharged. I'm going to say right now, PepsiCo is the winner of those two. But they're both good companies. But right now, Ramon LaGuardia has got it going. How about we go to my home state? How about we go to Jason in New Jersey? Jason.
Booyah, Jim.
Booyah, Jason.
I'm just a young man from Mays Landing, New Jersey. I watch the show all the time. Thank you for what you do. I got a bank stock for you. Multi-year low, great PE, great EPS, and a killer dividend. What's your take on TFC?
All right, I absolutely agree with all that, but that does not make a stock go up in this environment. Unfortunately, all the things you said are true, but I got to find a reason to pull the trigger, and at this very moment, I just don't have one. All right, we got to stay focused on inflation next week because it will tell us when this tightening cycle will end and the gloom will finally lift. I think we're closer than you realize. I'm still backing Larry Williams on Mad Money tonight. After reporting a record quarter last month, it's now time to get into federal relief, 4.6% yield. I'm hearing more about if the strength could continue from the company's top brass. And natural gas prices have yet to recover from last year's decline, $2.76. So what should you do with a company like EQT, which is the largest? You won't miss my exclusive. And now that we know the Fed plans to keep rates higher for longer, what could be the long-term impact be on our nation's best steelmaker, Nucor? I'm talking to the CEO to see if this recent dip could be viable. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.